Hello guys, ready to explore the crypto investment landscape? In this channel, I'm going to share a series of strategies to navigate long-term, mid-term, and short-term crypto market trends using a blend of technical analysis and fundamentals. By dedicating ourselves to both aspects, we are setting the stage for success in the upcoming bull market. Let's dive into our topic today. The mid-term strategy powered by MACD, the moving average convergence divergence. Alright, let's kick things off by understanding MACD. So MACD is a momentum oscillator and a powerful tool to determine the market trends. Now let's go to Investopedia to take a look at the MACD formula. As you can see, here is the MACD formula. It's basically a difference between the short-term EMA and the long-term EMA. So typically 12th period is used for the short-term EMA and 26th period is used for the long-term EMA. So if you want to know more about the EMA, exponential moving average, you can go to check our previous video. Okay, and let's go back to take a look at the MACD on the chart. So as you can see, here is the MACD chart. There's many elements on this chart. Let's take a closer look at each of the elements. So this blue line here is the MACD line, and it's the difference between the short-term EMA and the long-term EMA. As you can see, when short-term EMA is above long-term EMA, there's a positive value in the MACD. When short-term EMA is below the long-term EMA, there's negative value in here. So this orange line here is called a signal line, and it's typically a 9-period EMA of the MACD. Then this histogram here is the difference between the MACD and the signal line. So as you can see here, when MACD is above the signal line, there's a positive value and a green color. When MACD is below the signal line, there's a negative value and a red color. Let's explore two typical uses of MACD. The first one is MACD crossover. As we talked before, MACD is a momentum indicator. If MACD is large, it means the strength of the market trend is strong. If MACD starts goes back to zero, as you can see in this section and in this section, it means the strength of the market trend is decreasing. The MACD crossover strategy is mostly based on this observation. When MACD crosses down the signal line, it means the market is turning bearish. As you can see at this point and at this point, the MACD is crossing down the signal line. So if you see the price chart, the price is very likely to reverse its course. On the other hand, if MACD is crossing above the signal line, it means the market is turning bullish. So as you can see at this point and at this point, the MACD is crossing above the signal line. If you check the price chart, you will see the price is turning its course and turning bullish in this section. We have built in MACD cross strategy to help you identify these important times. You can select it in this panel in here. So MACD crossover. As you can see, this green dots means MACD is crossing above the signal line, and this yellow dots here means MACD is crossing down the signal line. Signal is bullish. So you will receive notification on these important times to help you make decisions. The other one is MACD divergence. The MACD divergence happens when the price moves opposite to MACD. which indicates a potential change in momentum. This strategy can be more accurate than MACD crossover because it uses more information in the context. The MACD divergence can be bullish divergence or bearish divergence. Let's look at an example for each of them. On the Bitcoin price chart, you can see a typical bearish divergence. As you can see, during this period of time, the Bitcoin price continued to going up a little bit. So it has two highs in the price chart, this one in here and the other one in here. You can see this high is higher than the previous high. But if you check the MACD chart, you can see there are also two highs in the MACD chart, this one and this one. But this second high is much lower than the previous high. So this kind of pattern between MACD and the price forms a strong bearish divergence. It means like after this point the market is turning bearish and the price is highly likely to going down after this point. Let's take a look at the ETH price for the typical bullish divergence. As you can see, during this period of time, the ETH price continues going down a little bit. It forms multiple lows. This one in here, and this one in here, and the other one in here. So this low is lower than the previous low here, and is lower than the previous low in here. If you check the MACD chart, then you can see the MACD also have multiple lows, this one and this one, and potentially somewhere in between, not so significant. So if you check it, this low of MACD is higher than the previous low of MACD. So this kind of pattern in the price and MACD forms a bullish divergence. It signals the market is turning bullish after this period of time. And it signals that the price is going to move up after this point of time. Instead of using the MACD itself in the MACD divergence, some people prefer to use the MACD histogram here. So as you can see, this histogram is smaller than the previous histogram. So it signals the divergence after this histogram, and it means the market is going to turn bullish after this point. Here is the deal. MACD shines in the trend market and can be used dynamically to identify potential trend reversals. To enhance its effectiveness, consider using it in combination with other indicators for a comprehensive approach. As we wrap up, remember that MACD is a versatile tool, but success lies in understanding when and how to apply it. It's a trend identifier, a momentum gauge, and a reliable indicator for market strength. By combining its insights with other tools, you are positioning yourself for success in the upcoming bull run. Sign up TTM to get free analysis using MACD-based strategy